Most people think keeping money in the bank is safe. You earn it, you deposit it, you leave it there and feel responsible. But here's the uncomfortable truth. Cash in the bank isn't safe. It's quietly shrinking. Not because you're spending it, but because inflation is eating it. Inflation is the silent thief nobody sees. It doesn't knock on your door, it doesn't send you a bill. It just makes your money worth less every single year. If inflation is 6% and your savings account pays you 3%, you are losing money, even though the number on the screen goes up. That's the trap. Your boss pays you in currency that loses value over time. If you leave that currency sitting still, your hard work slowly leaks away. The goal isn't just to earn money. The goal is to convert your labor into things that grow while you rest. So let's talk about 3 assets that are better than letting cash rot in the bank. Not flashy, not magical, just proven. First, broad index funds. Index funds don't try to pick winners. They buy the entire market. Hundreds or thousands of companies in one simple investment. Over long periods of time, broad index funds have historically grown faster than inflation and faster than cash. They don't require you to be smart. They don't require timing the market. They reward patience. This is money that works quietly while you're at work, while you're asleep, while you're tired of thinking about money. Second, dividend-paying stocks. Dividend stocks do something cash never does. They pay you for owning them. Even if the price doesn't move much, dividends keep showing up, quarter after quarter, year after year. It's not exciting, it's predictable. And predictable income is how you reduce stress. You're not just hoping the asset grows, you're getting paid to wait. Third, real assets, like real estate. Real estate protects you in 2 ways. First, rents tend to rise with inflation. Second, debt gets easier over time, while the asset gets more valuable. Inflation hurts savers. It helps asset owners. You don't need to buy a mansion. You don't need 10 properties. Even modest real assets turn inflation from an enemy into something that works for you. Now, here's the WorkSick reality check. This isn't about chasing returns. It's about defense. Cash feels safe because it doesn't move, but in a world where prices rise every year, standing still means falling behind. The worst investment you can have is money that doesn't grow. Not because cash is evil, but because cash has a job. Its job is to move. Emergency fund? Yes, keep cash. Short-term expenses? Absolutely. But long-term savings that never leave the bank account are slowly bleeding value. That's how people work for decades and still feel stuck. They earned, they saved, but they never converted. WorkSick isn't about gambling with your future. It's about understanding the system you're in. If your money isn't growing, you're working twice as hard for the same life, and that's exhausting. If adult life feels heavier than promised, you're not alone. Subscribe to WorkSick. We don't sell shortcuts. We explain how to stop losing to the quiet rules of money.